Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, May the 15th, starting new week, Monday. We don't have today too much information regarding economic data. We have a bunch of Fed talks that we are going to review in depth. But first, New York Empire State Manufacturing Index came way lower in the negative than expected, and this caused the market to start retracing back and pulling back to the lows of pre-market in a very interesting way. So first, we review the economic data, and now we are going to see a new way of that I would like to present all these statements, all these news regarding the Fed talks and several statements that we got on news today. So first, Joe Biden, he thinks that the debt meeting regarding the ceiling, raising the ceiling, will be tomorrow on Tuesday. That's good news if it happens. But for now, still on negotiations regarding the date for the meeting. But he remains optimistic about these discussions. That still a lot of uncertainty in these markets regarding this debt ceiling increase, but at least we are progressing. Anything can happen, and that's why we are seeing quite a bit of choppiness and quite a bit of, I think, selling pressure in these markets. Regarding Feds, we got 3 Feds talking today. The first one, Fed Bosticks, rate cuts aren't part of his baseline. The baseline is that we will not be looking at cutting until well into 2024. So that is really interesting because markets don't think so. There is still a lot of distance to go on inflation. He still thinks that inflation is too high, but at the same time, Jerome Powell already said that they don't think about cutting this year. If there is a bias to action, there is a bit of a bias to go a bit higher. So there's more to do. We are where Fed dot 6 dot has been. So this Fed dot plot is really interesting. It's in a 3-month rotation. We have still to see. We are waiting for the new updated Fed dot, but for now it's been at 5.1. Let's see if that changes for the next 3 months. That I think it's around late May that they are planned to release that update. Let's see if that is changed for this year. But regarding Bostic, he thinks that until next year we can basically forget about cutting rates. In the next several months, the math is going to work in our favor. I hope so. But look at this one. There is some risk of recession. If we fall into recession, though, it will be not long or deep. Bostic is very aligned with what Jerome Powell says during the press conference. Goldsby, on the other hand, is too cautious. We must exercise extreme caution if we are to return inflation to its target level without triggering a recession. For me, a rate hike was a close call. Looks like Goldsby is not as hawkish as Bostic, and overall, most of the Feds, Goldsby is still thinking that maybe raising 25 basis points during last meeting was too high. And last Fed, Kashkari, inflation is much too high, though it is starting to come down. Finally, they are seeing what a lot of people is seeing, that inflation is starting to decelerate in some sectors, and some economic data points are showing that. We shouldn't be fooled by a few months of good data. That's really good. Because I think markets are ahead of themselves, saying that they are going to see, they want to see cuts, they want to see Fed supporting the economy to avoid recession, and at the same time fighting inflation. And that is really hard to do. The Fed has more work to do. And finally, the last thing that I would like to highlight, Moody's. Moody's regarding US. Moody's, if you don't know, is an independent, in-depth, and transparent agency that provides opinion on credit risk through credit ratings. Basically, a credit rating for funds and for big risk is talking about US, saying that they anticipate the Fed to maintain restrictive monetary policy stance through the year end, same as Bostic, and they believe unlikely lower federal fund rates till early next year. So they are managing risk. They are I think they are quite experienced regarding these things, and they are quite aligned with Fed Bostic, saying that they don't expect rate cuts this year, and markets expect that. So that divergence, that gap between Fed, these agencies, some banks are saying also this, they don't expect federal funds rate cuts until next year. So this difference between markets and all these other entities are quite an issue, because if markets don't get what they want, they will basically sell off. We expect energy, food, and goods inflation, including vehicle prices, to remain on a downward trend. They still think that the inflation is going on a downward trend, and they still think that they will continue doing that, decelerating. So I think that's for now what I would like to share with you regarding all these economic data and also some statements for today. But let me tell you something. Do you remember that Microsoft Activision deal that got blocked? I think it was almost 2 months ago, 1 month ago, that Britain blocked Microsoft Activision Blizzard acquisition, and it actually gapped lower during earnings also on the same day, minus 7%, this huge gap. Well, today we got news for all those gamers like me that like this deal to be finished. EU approves Microsoft 70 billion acquisition of Activision Blizzard, clearing major hurdle. The key here is that they say that Microsoft offer remedies in the nascent area of cloud gaming that have staved off antitrust concerns. Those remedies are centered around allowing users to stream Activision games that they purchase on any cloud streaming platform. This is for streamers. The details on all this is basically on this article, really good article on the CNBC. And these remedies are what finally end up convincing these EU lawmakers for the deal to be completed. So I'm bringing up this news today because basically ATVI, Activision Blizzard, is right now almost 1% after gapping lower. I think this round here was a leak of those news. News came out at 10:30 at here, and since then we are actually going higher, a bit of topping tails, but Activision is in the green, and Microsoft really started pushing higher. But it is enough to counter the strong selling pressure that we are seeing on the Nasdaq today due to this New York manufacturing. I don't know. What I see is that on the daily, if we start from top to bottom as always on Mondays, if we check the daily, we are slowly but surely doing higher lows, slightly higher highs, and if you usually see this kind of patterns on the daily, there's some pressure being built up in this ascending triangle. This can provide a nice breakout to the upside, but also fall apart as the momentum is slowing down. The 30-minute chart also shows some kind of wedge from Wednesday last week, very volatile moves. On Thursday, we got chopped out basically. On Friday, we were selling off, but the open interest on the Nasdaq futures showed that this move to the downside was not accompanied by movement in open interest. And I think that's why we are finding bottom on this daily level and this pre-market low to really push higher. Right now, we are almost at I think this is 9:45. This is today's high. So daily highs is being tested right now on the S&Ps. We are not quite there yet, but we are seeing a change on the momentum, on the sentiment after this Microsoft news. I don't think that's enough to really change the background at the fundamentals that are right now in the markets regarding the debt ceiling, regarding the recession fears. But let's try to see other markets that may provide some insight regarding this sentiment. Copper, as you may know, Dr. Copper sold off on Thursday last week. We are at support. I really think Dr. Copper is showing that worldwide economy is sick, and also with the fact that China has low demand and low outlook for growth. I think that's why this slowdown on the economy also means recession at some points for some countries. So copper is feeling the pain. And what about gold? Gold was rejected another time. This is the weekly chart. 1, 2, 3, 4, 5 weeks dealing with these highs, being pressured to the upside and at the same time being rejected. Today is flat, 0.0%, very volatile. So markets are confused. Dollar, though, is showing nice move on the daily for a breakout, and on the 30-minute chart, it's looking quite really, at least decently strong. I think dollar in a recessionary environment would be doing pretty good. It has potential to the upside, and after all these base that we formed here. So I really think dollar is 105 potential. And yields are still in range. We need for yields to really take a position here. Are we going down and enter a recession? Are we going up and treasuries go down? That shows that inverted yield curve may finally stop being inverted. There's a lot of things going on here, but we still have to wait. This is the inverted yield curve still in range, still showing recession. Once we do this, then this thing is usually signing weakness on the markets. Once we finish inverting, this is showing that the recession is already here. Once the 10-year and the 2-year stop being inverted. What else? Russell, risk on? Well, in the middle of nowhere. Bitcoin, risk on? Look at this. I remember saying on the market update on Friday that Bitcoin was breaking down, but look at this bottoming tail. Still waiting. We are not picking up a direction. These markets are really confused. New high of day on the Nasdaq. So do you remember these kind of things? V-shape reversal again today with Apple in the red, surprisingly. Point of control of Apple is below price, that's good. Microsoft is showing choppiness, but this big push was on news for Activision, as I mentioned earlier. Tesla is feeling the pain, -1%, the same as Amazon was selling off quite hard. Tesla and Amazon are feeling the pressure of demand destruction on consumer discretionary. Right now, consumer discretionary is still red, 0.07. Utilities are also in the red. But look at crude oil. Crude oil that is supposed to show sign also of inflationary and recession, demand destruction, it's pulling back maybe a higher low. We'll have to see. But we need more information. These markets need information. So we are testing right now with a big 30-minute candle this descending trend line from Friday. So let's see what happens. There's a lot of hours still on the day. I don't think we are strong enough to really push higher without Apple. Apple is in the red, same as Tesla. I think Meta is really putting a lot of pressure to the upside. And overall, Microsoft is the one pushing. Let's see what happens. As I was saying, that we need information. We need fundamentals and economic data to move these markets, to really justify these markets either going up or going lower. Tomorrow is a big day, Tuesday. Retail sales, big number. We are expecting higher. That is showing consumer spending, retail sales, and maybe avoiding recession. This is quite important. For Wednesday, we have mortgages and a little bit of building permits. And Thursday, we have, again, a lot of Feds talking this week. I will provide also some statements for this day. So make sure to subscribe to the channel for these kind of events. And on Friday, Powell is speaking at 11. The same with other Fed talks. So this week is just about retail sales tomorrow and a bunch of Feds talking. And that usually provides a lot of volatility, but also a lot of opportunity. So make sure to stay tuned to the channel to really understand and have a nice edge on what they think and what they say. And let's see what happens. Right now, really nice reversal of the bottom for the Nasdaq, and the S&P is looking weaker, but let's see what happens. The status of the S&P 500 futures is just weeks and weeks, and so overall in most of the markets we have yet to pick away a direction. So be patient. And that's all from my side. As always, thank you for your time. If you found this video useful, please remember to click the button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time as always. Remember that we are approaching noon, lunchtime, from noon to 1 p.m. and after that into the power hour, anything can happen. Be careful, because today we already have all the news that are available for today, and this looks like undecisive. So be really careful, be disciplined, and remember that discipline and risk management are key for success. Stay safe, everyone, and I'll see you tomorrow.